This is Vasant Ponkshe again, a retired bank officer for Bank of Maharashtra. You know me well. I am coming before you with my video part C of my series number 4, in which I am talking to you about the technological disruptions which are likely to take place in banking scenario all over India in coming 4 to 5 years. Before we go to beginning of part C, let us try to understand why these technological disruptions are aimed at. What they say, the experts say, is that what they want through these disruptions is that accuracy, analysis, speed, correctness, cost cutting, replace human intervention, and that is the mantra over there. But they say that repetitive and predictive actions could be done by machines, and complex actions where human experience is required, human brain is required, only those things should be done by human being, and for that very less but intellectual human manpower will be required. So that is what there is a perception and thinking as far as the technological disruptions are concerned. Now we go to very important disruptions that they call it as a RPA, that is Robotics Process Automation. What they say, what robot can do, they will mimic human actions. They will use their own judgments as far the data feed to them. And they will understand the human intelligence also, see the miraculous changes which are likely to come. So what they say that what robots can do actually as far as this disruption is concerned. They are saying that alliance between leading incumbent financial services and technological companies that are taking place as far as using robotics coupled with artificial intelligence in key address points are concerned. As I told, to reduce the cost and to mitigate the risk is their main purpose. And what they are targeting is that capabilities such as social and emotional intelligence. So this is a new concept. Social intelligence, emotional intelligence, natural language processing, local reasoning, this is a new aspect, identification of patterns and self-supervised learning, physical sensors, mobility navigations and many more things can be done through RPA coupled with AI. That is what they say. And it said that they are looking to replace banking teller. So that is going to be huge disruption. The main purpose they are now openly saying is that they want to replace the banking teller, the bank teller who sits in the bank. And what are the sub parts of that? They say that cognitions, the robot's ability to receive, understand, plan and navigate the real world is more important here. And that is what the cognitive ability of the robots can work to automatically diverse the dynamics and complex calculations and environments. Second is manipulation. The precise control and manipulating objects in the environment that can be done through robotics. Now with improvisations in manipulation, they say that robots will take on a greater diversity of tasks. That is another purpose. What is the third? Interaction. That is also it's very important, they say. Interaction, the robot's ability to learn from and collaborate with humans is going to make a huge change. And there is lots of progress here. What they say is that verbal and non-verbal communications also robot would be able to observe and accordingly copy the human behavior. And out of learning from home experience, the robots will increasingly be able to work as being worked as a human being alongside humans. So they will try to replace the humans also. The next would be B2B robot, they say, that already it is there in the system. And the artificial intelligence, which already plays a prominent role in capital market sector with what they call it as a algorithmic triggers with a high speed for share market transactions, capital market transactions. And the next generation of algorithm trading is already moving, and it will be a great disruption because the predictive perspective of the analysis to be done by robots will play havoc. And accordingly, the robots will be able to anticipate and respond in advance as for how the market is going to take different turns. And that will create the facility for huge programming for the limited hedge funds, and institutional investors like private investors will be benefited to a great content. A core competent of the fund to design particularly around the trading facilities and trading authorities, it will be hands off with the robotics, and banks those who are already using artificial intelligence to detect payment frauds will also be benefited with this AI ability to spot abnormal behavior in the transactions taking place in the market or in the accounts of the individuals, and they will try to find out whether there is any abuse or rough trading taking place. And to that extent, robotics shall also come forward to give proper advice. Now, wealth management is another phase. That is also a digital disruption where robots will be helping. And before the things go into deeper, it is important to establish that in the market there has to be a common understanding as to what constitutes the wealth management. Now, after this RPA, we go to the digital wallets. We all know digital wallets, they are already there. But these wallets are getting evaluated, and digital wallets typically they are housed within a mobile phone. They are now core of a battle in between traditional financial services and the prospective or latest financial services being offered, and this disruption has already started playing a role of game changer. And this gives the consumer very fast, very secure, at low cost method to use, store and send money over internet. Only mobile is to be used. And this service is of great value, and it gives a very lucrative margins to the bankers also. And as more and more greater acceptance of mobile device as a banking channel is going on, it will converge the billions of payment cards being issued globally, and the transactions will get generally to a large extent. Now, given exposure and having spent so much for deploying EMV chips to replace the magnetic strip technology, we all know that all the cards were changed and the magnetic strips were changed to EMV. So many consumers, but they are now turning to smartphones as preferred tool for all their online banking transactions or other different types of transactions. That is why mobile devices offer more convenience and greater security than the normal plastic cards that cards were being used. Now the tap and pay mobile payment user, this experience can also be a faster, it will be very easier, and typical plastic card transactions they will undergo a huge change. And it also matters for most of the bank that even the modest reduction, say 3% to 5% of reduction of interchangeable fees or interchangeable fees from debit cards to credit cards, that will represent a very material change, a very magical change for the bankers. So bankers will have to be very careful as far as this technology is concerned. Now we go to the next technology, change the bank. This new word in India, at least I don't think we might have seen, or we might have thought, or we might have learned about that. But they say change the bank. So they say change the bank becomes a bank. So over next 3 to 5 years, digital efforts will go in such an advanced stage or advanced area, and diverse robo investing will take place. So automation of the consumer lending and clearing and settlement of cash and security transactions will take place through robo analysis and through artificial intelligence. And as these things will go on, the need for a separate instrument for change the bank shall arise, and there will have to be the teams for transformation of all these things, and these transformation teams shall be inevitably in the digital forms, and they will become a new platform. And the meaning of this means to keep the change the bank and to run the bank, teams on same page will be required. So you have to run the bank, at the same time you have to give the facility for the change the bank. So you get new customers through the change the bank facility, and The operational thinking and the strategical thinking and marketing shall play a great role. And at the same time, many organizations they are working on these things, and the fintech they are also coming forward to take more and more challenges in this respect. Now, next part of the sub part of this is that managing health of the wealth. This is also a new concept. How you will manage the health of a particular wealth. So, wealth managers they are faced with a major change in the client's attitude. The attitude of client is ever changing, and there is not enough truth in cynical one-liner as a long-term investment or a short-term investment. And sometimes they say long-term investment it fails, sometimes they say short-term investment it fails. So it's a dilemma whether long-term or short-term. And it is estimated that in near future many fund managers they will be jobless if robots are going to take place, if AI is going to take place, if the change the bank is going to be the system, the algorithms are going to play havoc, then naturally the fund managers will have a very tough days. The next deception they are saying is the analyze and understand the customer's intelligence. See how the things have gone beyond. Now the customer intelligence will be the most important predictor for a revenue growth to ensure good profitability. So as a customer, you will have to understand in advance as to what customer values, what customer want, what is likely that the customer may demand, and that is how the different groups will have to be built up, and those groups will focus on the data and they will conduct different kind of surveys, and there would be some proxies or real individuals, and data to analyze the customer behavior shall play a big role. And in that case, technology advances have given the business access to what they call it as a expeditious data about the users, and to understand what they want and to understand in advance what they want shall going to be a key. And what is the opportunity here? That whosoever can analyze in advance and unlock the customer intelligence, they will be front runner. So to give the customer what they really want, even if they demand it, is going to be the key to success. So analysis will go to the extent that even customer may not have thought that he wants something A, B or X or Y product. But your system analyzes and it uses the customer inbuilt intelligence, and it tells the banker or fintech company that this customer is likely to come with this demand, and that is how limited time offers will be posed into that. Now the next we would like to talk about the public cloud. Now public cloud will become very dominant infrastructure model as far as this technology is concerned, and that shall prove to be a big shift towards the cloud-based computing, and that will create a big shift. Now data storage costs are getting higher and higher, but cloud-based infrastructure shall help the banks and fintech companies to easily manage the data, and at the same time apply the sophisticated analytics for all these things. And according to the International Data Corporation, that is they call IDC, the public cloud investments are going quickly, and spending on private clouding is very increasing more and more, and that is why to replace that the traditional infrastructure shall may be kept aside, and it is estimated by the IDC, that is International Data Corporation, that public cloud investments will increase by 32%, and they will go to more than $21.7 billion, which were hardly $17 billion 5 years back. And the overall total cost of cloud IT infrastructure spending shall grow 26%. It will reach to $33.4 trillion, and to put that perspective, it shall be approximately one third of all IT spending all over. So we can understand that what is the cloud computing is going to take place in the near future, and how that will prove to be the cost savers. The payment infrastructure for many industries, even for healthcare, for small fintech companies and institutions, and they will be able to provide the conventional banking facilities. And that is how the banks, those who are selling infrastructure as a service to others, this facility of cloud computing, they will have a leverage over uh, other banks and their other competitors. Now we come to a major part of cyber security. This is very important. Now cyber security will be one of the top facing financial institutions, and they will be facing all those challenges. Now, PricewaterhouseCoopers in their annual 19 annual survey, they have said that the 69% of the financial services CEOs, they reported that they are either somewhat or extremely concerned about the cyber threats, and many CEOs are also worried about this. Now, unfortunately, it is not likely to change because cyber security, cyber threat is going to be there. And in the coming years, due to following forces, these problems will have to be faced. And what they will have to do? They will have to use the third party vendors, then rapidly evolving, sophisticated and complex technologies, and cross-border data exchange, that is going to be very important, exchange of data. Then increased use of mobile technologies by customers, including rapid growth in Internet of Things. So coupled with this shall create a great problem, great challenge, and heightened cross-border information and its security is going to be a big challenge as far as the cyber security is concerned. Now we come to the Internet of Things. They call it as the IoT. Now expected growth in IoT, what they say is that that will introduce a new set of security risks and challenges that will require serious attention. Bank will have to pay serious attention. Now this IoT refers to the glorification of physical objects like devices, cars, houses, wearables that contain sensors and softwares and ability to communicate. So that is the entire new out of the box and out of the system thinking is there. And how IoTs are going to play a role in this financial system is going to be seen, and it would be very interesting. And they say that the opportunities in this are very fascinating. And even they say, though not related to banking, but dishwashers and the timing can also be scheduled and rescheduled. So that is how remote seems to be the most important parameter as far as the IoT is concerned. Now, some of the industry sources, they are saying that the number of IoT devices, those will be deployed across the world, shall reach to minimum 25 billion appliances in next 3 years. Now, up till now, IoT growth in financial services has primarily been occurring in payments, in insurance, and in banking. But when the banks are forming partnerships with the wearable technology manufacturers or with different computers, with watches, with fitness trackers, and all these things, there also bankers will get a chance to have their inroads with the different kind of types, and the insurance company shall be using the technology to monitor the driving habits. When they talk about the car insurance, they will monitor about the fitness data through the wearables, so they will be deciding the policy premiums as far as their fitness is concerned, the medical insurance are concerned, and that is how the cyber security, though it is leading challenge, the adoption of IoT through cyber security, along with cyber security, and along with the types with the wearable instruments, that is going to have a great interface, and it will increase lots of risks of unauthorized access of the banking parameters. So that is going to be a disruption, but that will be a great challenge. So in that case, when we talk about banks to use IoT, what could be the concerns? They say that the attacks will surface. Hackers can have easy entry to a corporate network through an IoT device. Then IoT technology, which relies on cloud-based services, So it will be challenging to implement effective parameter defenses. So that shall also be another challenge. Then they say there will be privacy concerns. The privateness and IoT data coupled with all these things and advanced analytic capabilities, it will potentially result into a serious privacy concerns, and they may breach some privacy violations also. And device management is also going to be a big challenge. When we talk about IoT and different devices are going to be used, as I told, wearable devices are to be used. So the strong security control and maintaining the security permanently 24 by 7 as a baseline, that is going to be a big thing. And what they say is that China is now world's largest peer-to-peer lending market. P2P is what we are talking about, and it has got maximum mobile smartphones users than any other country in the world, and that is why many US financial institutions will be fully functional as far as the Asian hubs as compared to the Asian hubs. Now they are talking about the P2P in India. It has yet to become very ripe, and P2P in India has to go a long way as far as these facilities are concerned. Now we go to the next one. What they say is that protect the privacy or else there will be a problem. Privacy is another critical concern, and customers must feel from inside, from within, that their information will be used for their own benefit and for nothing else. They must be sure that in any way the bank or the financial company or the technology is not going to intrude upon their private lives. And this is very sensitive topic. In fact, if handled poorly, the privacy violations shall lead to heavy loss of the customers, and that will have a very regulatory serious responses. So that is going to be a very important parameter, and the data storing, use of data, avoiding misuse of data are going to be different challenges. And what they say is that if you cannot pay enough attention to, again going back to cyber security of the financial institutions, in addressing the information you collect from your own customers, then there is likely to be a debacle. But a growing number of cybersecurity events in recent years has shown that the traditional approach is no longer good enough. Banks will have to do something very special. And what they say is that more than 38% security incidents, those were detected in last few years, they were quickly detected, because what they say that the system may not be able to avert the fraud, but immediate detection is going to be the key. So bank has to make sure to have access to the necessary talent and skills to execute all these IoT systems, and then only the financial institutions will be able to win over the situations. Now we come to the next things as far as these disruptions are concerned. Now financial institutions have a lot on their plates. There are many issues ahead of them. Now emerging competitors, shifting demographics, rising customer expectations, and changing regulations, ever-changing regulations are going to create a different scenario altogether. And that is how the banks and insurance companies or the different FMGC companies, they will have to think about the classic time, the limited time offer, because most of the technology that is not proprietary, and so it is the race is going to be very harsh. And if you blink, you might find that your competitor has already been built up the advantage. That is why the insights to aid the real-time decision making, that robust systems will have to be developed by the bank. And for the last one in this video, I would like to take big data and analytics of spending. One of the ways to determine the technology's influence on any industry is to look as to how that industry is investing. Now, banking sector is currently one of the top investors by industry in a big data and business analytics solutions. And according to IDC, the semi-annual big data and analysis spending that guide they provide, they are saying that the amount of data generated by the financial industry, credit card transactions, ATM withdrawals, credit scores are mind-boggling. And being able to put the entire data to use to make business decisions and processes effectively and to come out very clean, actionable insights is going to be the key, and that is going to happen. So all the marketing strategies, all the marketing platforms will undergo change. The banks also will have to change their marketing strategies. And this big data to learn more about the customers will be able to take different financial decisions, to offer different financial products, to come out with the new products. And the customer spending habits, sales management, segmentalization of the customers, optimizing the market facilities, and cross selling of products, and at the same time maintain the zero risk, manage the fraud restriction or fraud avoiding technology are going to be the key issues. And that is how the financial institutions will have to streamline their initial processes, and all these things will be done by the machines. So whatever I explained to you in last 5 minutes, last 10 minutes, you will observe that hardly there is any human intervention in all these things. So at this stage, I conclude part C of my video, and in the last part I shall be covering the remaining technological disruptions which will take place in banking. And while recording the last video, I shall be adding some fresh inputs, some latest data to keep you all updated. With this, I am thanking you for watching my video. I stop here. Kindly await my next part of the series, video D, in which I will cover remaining technological disruptions which are going to take place in banking, finance and insurance as far as the Indian economic scene is concerned. Thank you very much. Thank you.